Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay guys, this will be not the easy task to do, but let's try to create a trading plan for the starting of the next week. Although we do not have much really new information since the past Thursday when this upward action has happened on the market, but still we have some that could let us to understand in what direction we should watch for. And I hope guys that you have taken a look over our weekly research on the euro currency, and you probably know already that this upward action and whole previous week has formed the weekly bearish stop grabber on the weekly time frame. And in fact that is the only clear pattern that we have currently. Also, it's too few time has passed since this action has happened, and it's very difficult to understand whether this action was mostly emotional or this action has some foundation. We understand that this was happened due to FOMC protocol meeting, but that information in fact not as new as it has seemed when it was released, because Ben Bernanke also talked about and worried about the market participants about the overestimating the recent FOMC meeting. He said that right after the meeting, he said that do not treat this statement that we have made on our meeting that we will start the closing and contracting of the quantitative easing right now. Yes, we see some improvement in the economy, but this probably will happen in some far time when we will start really take some measures and steps for closing the quantitative easing. And that was said when the market in fact has too significant reaction on the FOMC meeting. It was really active and a furious reaction on the statement of the Open Market Committee. But one thing is the speech of the Ben Bernanke, but quite other thing is the official protocol of the meeting, when you can see the voting and the opinion of other members of the Open Market Committee, and that reaction has followed precisely due to this protocol. And in the medium-term perspective, the major will depend, as I said, whether this action is mostly emotional or not. Because if this action was mostly emotional, then it should finish somewhere in this area. Market should return backward action. Maybe you will see on the market this happens very often when the market shows some significant extended action, but market lately gradually erase this action and continue to move down. That also is possible. Well, but technically speaking, as I said, we have the bearish pattern on the weekly time frame, and in general, as our analysis suggests, that even despite the fact that this action was really significant, this is really very significant move, about 300 pips to the upside, but in general, even this kind of move hasn't broken the setup, the bearish setup that we have on the weekly time frame. Yes, that was the already significant retracement on the daily time frame, but on the weekly time frame it hasn't broken the bearish sentiment and bearish setup that we have there. That's why we probably will continue to treat this situation as the retracement, and I will continue to take the bet on the downward action. Besides, also technically, even now we can't take the long position, even if we really would like to do it, because take a look, market stands at daily overbought and the fib resistance, so that's not the time to take the long position right now. So that's why we should understand what we could do on Monday, or at least what we should to keep an eye on Monday to control the major events that could happen in current environment. So this top on the daily time frame is the invalidation point of the stop grabber. So that is our working swing for the coming week. If market will proceed higher, maybe not in the beginning of the week but later, then the bearish stop grabber on the weekly time frame will fail, and probably we will have to reassess overall situation in the medium term perspective. Until this high will hold, we will count on downward continuation to the downside. First by the brand body trade that still we have here. The context is still here. That was the second close above the 3x3. Friday was the third close. So market should start move to the downside on Monday. If this will not happen, that will be a bit worrying sign, and in this case probably we should close our shorts and just wait for the more clarification. That is the first moment that we should keep an eye on Monday. We need to see that market will turn again to the downward action. But brand body, as I said, could be just a triggering pattern for something bigger, because the stop grabber pattern on the weekly time frame suggests the taking out at minimum of these lows. Well, that is the bit extended target on the weekly time frame. So that's the major setup in general. Now if we'll take a look at the 4-hour time frame, we would not see much here. First of all, we could understand why this retracement has happened. That is the 618 extension of that pattern, A, B, C top. Market shows the pullback. Well, here we see some hint on the potential bullish dynamic pressure, but I think that it's a bit too early to speak about it because it's just two candles. So market has shifted trend to the bullish side, bearish side, but price action is developing to the upside. But it's really not significant term as this move has started. So that's, well, this looks like the bullish dynamic pressure, but probably to rely on it will be a really overestimation of this moment. That could be just a reaction on this support. Well, also I do not see nothing more on the 4-hour time frame. We see this is support. The market has hit an agreement with this, probably with this support. It's a reasonable retracement. So now we should keep an eye on what will happen after that. Well, we can't speak here about the butterfly because this low stands below than this one. Since this is initial swing, it should hold overall falling price action, but it is not. So here we can't get the butterfly. Well, on the hourly time frame, what we see that was our double repo sale that has completed nicely. So this was the ABCD move right to the confluence support on the hourly time frame. This first touch of the confluence support, retracement right to the 50% level. Again, you see 50% resistance. Euro likes the 50% resistance. Retesting this area again, bounce, but take a look, this bounce is weaker than this one. Here we have some thrusting acceleration to the upside. Here we do not see it. Particularly by this action, at least now, I do not believe much in the potential acceleration to the upside. At least currently, this action looks as the retracement, mostly as the retracement after this swing down. Okay, so that could be just the ping pong from the significant support. That is the confluence support. First test bounce, second test bounce. So if market will return right back, the probability of the breakout is growing, since as often a market is testing the support area as it become weaker. So that's why if market will return right back, the probability of the breakout will increase. And in this case, our next target will be 129.27, is the 618 support of our brand body sell, and that will be also this. If you'll take a look at the 4-hour time frame again, ABC top, 100% extension, that will be also an agreement. So that is the major setup that we should watch for in the beginning of the week. Particularly speaking, we do not want to see the breakout to the upside, some acceleration thrust to the upside, because that's not will be quite in a row with downward development. So if you do not have any positions right now, well, it's very difficult to understand should we take it right now or not. But from the other point of view, it will be difficult to find something better to possess yourself with the bread and butter trade. Well, probably we could try to take short, but we should be careful if market will start move up. We do not want to see this. We need to see some choppy action here and breakout to the downside. That's what we would like to see, because any upward acceleration will be unnatural for normal development if market really intends continue move down. Since we should not forget that market stands at the overbought, and any upward action will be the warning sign. Well, so as you can see, market doesn't give us a lot of chances to create the clear trading plan for the beginning of the week, since we do not have any patterns on the lower time frames, just the sideways consolidation. That's why all that we could do is just to wait how market will respond to this situation. Particularly, we would like to see the downward breakout. Well, and the warning sign for us will be something action to the upside that will be very significant. That what we do not want to see. So let's see what will happen. Probably if you would like to possess to the downside, maybe this is not bad area to do this, because that is retracement after hitting the support. Hardly market will give us some better chance to enter. Stop should be placed somewhere above this area. This is the conservative stop in terms of the real breakout. So this will be, if market will taken out of this highs, it will be a real canceling of the even weekly pattern, weekly bearish pattern. But maybe you will find some more appropriate solution for entering with the current market. So let's see what will happen on Monday. I hope that on Tuesday market will give us more chances, more patterns to discuss, and situation will become a bit clearer on the euro currency.